record. Hi, I want to thank you guys and welcome you to the workshop. We're going to talk about buying a home here today. I'm going to introduce myself to you first off. This is me on the screen. I'm Kevin Garrett. You can reach me directly at 559-260-7950, and my email address is kgarrett@snapfi.com. Now, just a little bit about me here today, and I don't want to keep you guys long. I've been helping families purchase and refinance homes for over 15 years, and I don't know everything. And I'm always learning. One of the biggest reasons is this industry is always changing. They change the rules, the guidelines, the programs, and I always have to stay up to date with that. So I don't know everything. Now, for those of you guys who are in the room here today, or I please ask you to silence your phone during the presentation to help us get through this as quickly as possible. That way you guys can get back to your families in a timely manner. I really appreciate that if you guys just keep this really down here. So let's get started. Now, what I'm here today, what I'm going to talk about is my main objective is to help you understand how you can get approved and get you qualified to purchase your very first home. I'm going to inform you about the process of getting the loans. I'm going to educate you about the three most important things about getting approved for a home loan before you even apply. It's really, really important. And lastly, and I'm going to tell you this up front, I want you guys to set an appointment with me and put you on the path of home ownership. I'm going to share with you at the end of this video 3 different links that you guys can access 24 hours a day. One link is for you to apply right away. Another one is to just answer some questions to get a pre-approval if you don't want to apply now, to put you on the path to homeownership, tell you what to fix, tell you what to do, let you know where you are. And the other one is a link to get your credit repair if you have that problem. So we're going to talk about buying a home. Let's get right to it. Now, I don't know why you guys decided to attend and check out this webinar, but most people are logging in, checking out this video because they're interested in buying a home. So if you want to purchase a home, you're in the right place. If you're serious about buying a home, the information I'm going to be providing for you today is going to be very, very helpful. Now, you want to find out how much home you can qualify for before you start talking to a real estate agent. Before you start doing anything, the best thing to do is get your loan approved first. That way you know what your payments would be, interest rates, what your closing costs would be, basically how much cash you need to have to purchase and move into a home. You want, a lot of you guys are here because you want a home, you want to find out more about the buying process, and you may not be ready now. And that's completely okay. But I do have a link I'm going to show you at the end of this presentation. I want you to write down because I want you to answer a few questions and allow me to coach you through the process if you're not ready, if you're just looking for information, to get yourself set up to get approved in the future, if not now. But I'm also looking for you guys who are serious about buying a home and you want to get started right away. I'll have a link for you to apply. You can open up an account and you can start filling out the information, uploading your documentation, and get approved right away. Now, other reasons people want to buy a home, one of the biggest reasons why people want to buy a home because they want to stabilize their family. They want to have that family stability, and they also want to start building wealth. Owning a home will allow you to pull equity out in the future if equity is available, and you can access it by keeping your credit score high and maintaining your proper debt-to-income ratio. Another reason why people are wanting the home because they want to avoid the landlord from selling the home on them, and they want to prevent that from happening to them. So they either position themselves to buy the home if the landlords decide to sell the home, or they don't want to be left high and dry if the landlord gives a 60-day notice. Another good reason to buy a home is to avoid rent hikes because most investors in time will eventually either sell their home or refinance the home. And if they refinance a home that you're living in, you're going to pay a higher rent because they're going to get their cash out and they're going to incur their new payment onto you in a form of a rent hike. Another reason to buy a home is, it just gives you a sense of pride. And a lot of people will respect people who own a home, but it's nice to have your own home and you'll enjoy the pride of ownership and have a place to call your own for you and your family. Now, there's many, many other reasons why people would want to buy a home, and everybody's reasoning is different. So I just want to leave you with that. Now, One of the three things that's really important in getting a loan, it's really some things about getting a loan that you really need to understand. And that's your credit, your income, and your debt to income ratios are the three most important things that are reviewed when you apply for a home loan. So if you have income and no credit, we probably can help you get established credit really quickly with the credit repair or offer you a secured credit card or something. And we teach you how to use that credit properly in order to maintain high credit scores and get approved for a home loan. Now, if you have credit and you have a debt to income ratio that's too high, you're still not going to get approved. Even though you have good credit or a whole lot of credit, it might harm you and not help you. So there's a nice in-between mix that most investors look for. And so if you have good credit, but your debt to income ratio is too high, you need to pay down some of your debts. That's the bottom line. Now, the guideline for most investors to get your loan approved is typically a max debt to income ratio of 45%. And that typically goes for all the first-time homebuyer programs out there. And sometimes you can get approved with a ratio of 50%, but that's going to depend on how high your credit score is and other compensating factors. So keep that in mind, because even though you have good credit scores, it's going to be helpful. But if you don't have the proper debt to income ratio, you still won't be approved. So I won't mention people with bad credit with no income and high debt to income ratios. There's really no point, right? And you know you're not going to get approved for a loan. You probably won't even get a credit card unless it's secured. So if you're on this call today, if you're listening to this video, you have some challenges with your credit, that's okay. Go to the right link. I can get you on track for getting that together for you. And if those who are interested in buying a home, there's also going to be a link for you there as well. And let's continue. Now, the process of getting your loan approved is real simple, right? You simply apply for a loan. Now, we're going to review your credit report. We're going to ask you for some pay stubs. We're going to see what the maximum you're eligible for, to see the maximum loan amount that you can get. Now, the things you need to provide when providing for a home loan, they're the same for every loan or bank. The paperwork that's required, and most of you guys probably have already, but here's what's required. As you can see on the screen, a government-issued ID, driver's license, green card, or work permit, right? 30 days worth of pay stubs with a year-to-date income clearly shown on there, because some people have different payroll companies. And most payroll companies do it the right way, but a lot of people who are small mom and pops, I've noticed sometimes I need to send out a VOE for that. We want to see 2 years of tax returns and W-2s. By the way, your tax returns, we'd like you to sign those, because typically when people get those taxes done, they get a copy of their documents, and those copies what they keep, but you don't sign the copies. You typically sign the ones you mail off. Now, typically, most people are using it, filing their taxes electronically, but I would like to see signatures on your tax returns. So again, we want 2 years of W-2s and 2 years of tax returns. And I'll make this side note. Some companies, some programs require 3 years worth of tax returns and 3 years of W-2s just to verify that you're not writing off interest on a mortgage and haven't been a homeowner in the last 36 months. Another document that's going to be required is 2 months worth of bank statements. Now, if you have a joint account with somebody that's not going on the loan, I'm going to need you to write a letter showing you have access to those funds and you have permission to draw on that account if you need to. That's what's going to be required, okay? Just want to let you guys know that. Now, typically, if you was in a live room, we'll be filling out the application, but we're going to skip this slide and move on. We're going to not talk about your debts, but I want you to think about your liabilities and your credit and your income. So in your mind's eye, write down all your bills that you think would show in the credit report. Now, the bills I am not talking about is your cell phone bills. I'm not talking about your car insurance. I'm not talking about child care expenses. I'm not talking about those type of bills. I'm not talking about your SMUD or PG&E or your light bill or anything like that. But the bills I do want you to write down is everything that will show on your credit report, such as your student loans, a car note, a credit cards, a child support that's court ordered. Some of those things may show on your credit report. Those are the debts that I'm talking about right here that I want you to think about. Well, let me move on with that because you guys are not applying today. But if you do, there's 3 links that you can see at the end of this video, and you'll be able to go to the appropriate link for your situation. Okay, great. Now, not everybody I talk to has perfect credit. Everybody has bumps in the road. Statistically, many people are saying that most people's credit report has errors on it. So that's fine. But some things that are on your credit report are going to need attention, so they don't have to be addressed. So credit issues that may show in your credit report may have to be addressed. Things like collection accounts, depending upon how high they are. Okay, some collection accounts we will ignore, but at the same time, those same collection accounts may or may not be hindering your credit score. Recent evictions, bankruptcies within 2 years old is okay. In other words, if you had a BK 2 years ago and reestablished credit, you still can apply, okay? Medical collection accounts, we don't count those into your debt-to-income ratios, and we ignore medical collections on your credit report. But again, they will be affecting your credit score. So sometimes getting those removed will help increase your credit score and not weigh so much on your scoring factors and their algorithms. Now, student loans will be added to your debt-to-income ratios, even if they're deferred. And by the way, let me bring this point up because this is important. If you have student loans that are deferred, start making payments on those, even if it's just the minimum amount. Here's why. If you're not making payments on those, the balance on those accounts are simply going up every month, and that's going to weigh on your credit score. Now, about student loans. If you do have student loans and they do not show in your credit report as with a minimum payment, what underwriters are going to do, they're going to combine your total student loan payments on your student loan balances, and they're going to apply a 1% rule. So, for example, if you have a $50,000 student loan on your monthly calculations will be $500 as a minimum payment, and that payment will go on against you on your debt-to-income ratios, even if it doesn't show in your credit report, even if it shows deferred. So that's going to be important. Now, each credit profile is different, so it's best to go over every line of your credit report if you ever get a free copy of all three bureaus, or if I share your credit report with you, we'll go line by line. Now, something else about your credit, we're going to have to explain your inquiries in the last 120 days. We just need to see if you opened that account, and if you did, what a payment's going to be attached to it. Or if you didn't open that account, we just need something in writing saying that that account was not open, okay? Great. That's enough about credit. Now, with these programs that we offer, there's different types of loans out there, and there's also different type of homes. Now, the type of homes that you can purchase with our loans are single-family homes. You can even buy a manufactured home with a permanent foundation along with the land ownership. Now, make a note of this. If the manufactured home is on land that you do not own, this loan will not work for you. You can buy 1 to 4 units, or duplex, triplex, or quad, right? So you can purchase a duplex as your first home / investment property. Many of you I encourage to do that, to put yourself on the fast track to building wealth, buying a triplex, live in it for a couple of years, rent out the third unit, and then go buy another home and take the equity out of that out of that property. Here's a single family home, stick built. This one happens to be a flip a friend of mine done recently. It's already sold, but this is a single family home, and there's a lot of them out there. You guys know what that means. Now, here is an image of duplexes and fourplexes and a manufactured home that you can buy with our first-time home buyer programs, okay? Now, here's something that I want to keep in mind and reinforce. You can purchase a manufactured home, but it has to be on a permanent foundation, and you must own the land. If you don't own the land, this loan will not work for you. What do I mean? If you have a manufactured home and it's on stilts, or it has skirts under it, or it's in a mobile home park, and you do not own the land, this loan will not work for you. It's not going to work for you. It's that simple. Just, read the screen, right? Now, different type of loans. We have government loans. Those are the FHA loan and VA loans. We have conventional loans, and we have USDA loans. Let's talk briefly about the difference. Basically, the two government loans, they have their different rules. FHA requires a minimum credit score of 580, but here's the key. You won't qualify for a first-time homebuyer program with a 580 credit score. With a 580 credit score, you have to have your own 3.5% down plus your closing costs if you have a 580 middle credit score. And I got middle spelled wrong here, so watch my spelling. Now, VA loans, government insures a lot of investors. We can go with a 580 on that. I'm going to put 620 here as preferred because a lot of the investors have something called overlays, and they prefer to purchase a file with a 620 credit score. But I have 1 or 2 investors who will go as low as 580, and no down payments required with a VA loan. However, you got to have your DDT 214 certificate, and you may or may not have to finance in a VA funding fee. Now, conventional loans are really the most popular out there. They're not insured by the government. And nowadays, the investors opened up the guidelines, and you can use 3% down with a middle credit score of 640 and above with a conventional loan. And sometimes that's a better option depending upon your credit score because of the MI factor, MI meaning mortgage insurance. We also have the USDA 100% loans, just like a VA loan. Again, they have a middle credit score of 640. And these are really designed for rural areas, and the property has to qualify or be eligible. So if you're going to identify a property, you have to let me know what the address is, and I need to look it up into that government USDA system and make sure that that property is in their registry and is eligible for a USDA loan. Primarily, these are for rural areas with populations 25,000 people or less. Now, let's talk about different types of loans here. And I know I'm talking fast, but this is important. The most popular, most common loan that I offer are fixed rate loans. So don't get scared, okay? And fixed rate loans doesn't mean that your payment won't go up. And let me explain. If they increase your taxes on the property, if your insurance company raises their monthly fees, your house payment's going to go up, even if you have a fixed rate loan. A fixed rate loan simply means your interest, your principal and interest payment will not change. It doesn't apply to your insurance, or it doesn't apply to the taxes on the property, nor if you have association dues attached to your property, does it apply to association dues for condos or certain communities who have Millerus. Now, adjustable rate loans are interest rates that change once a month, once every 6 months, or once every year. And it all depends on which index the interest rate's tied to. 99% of our loans, again, are fixed loans, so you don't have to worry about that. And we don't offer a lot of adjustable rate loans unless you request an adjustable rate loan, but there are some good reasons why you would want to get one, and I listed one here. So this type is typically used for if you know you're going to sell the house in a set period of time. For example, let's say you bought a condo for your child in college. You want to sell that condo when your child graduates in 4 to 5 years. So maybe then you'll get a 5/1 ARM or a 7/1 ARM. You know, if he stays in college or she stays in college for 4 years, that'll give you a whole year to sell the property before the interest rate adjusts in the 5th year. So there's some good reasons to use adjustable rate mortgages. You just need to have a plan. And typically first-time home buyers don't use adjustable rate mortgage because they might be a little nervous. But, you know, we can discuss that options if that's something you're serious about. Now, a lot of people get nervous about buying homes, and I'm going to talk about where the interest rates have gone and moved in the last few years. And here you can clearly see a 30-year mortgage chart. Early in 2017, they got a little higher. 2016 was the lowest point, and we've seen them do nothing but increase. So if you're going to hesitate, based on the chart that I'm seeing here, we already hit a double top. If this continues to rise, rates are going to get higher and higher. And at the time of this video, we're already in 2019. And if you can notice right here, they're at 4.8. And I speak this video today, they're 5 1/8, depending on your credit score, 5 1/2, depending on your credit score. So if you're hesitant, I encourage you to take advantage of the current interest rates because I have seen them higher, okay? Now, we can help you purchase a home. We can help you budget for a home. Yes, we can help you fix your credit where you can buy your own home. So we can get you into a home loan. If not now, we can do that in the future. So if you're not eligible now, but you're willing to work on your credit, we can get you approved. So I want you to make an appointment with me. Provide me with a little personal, I'll provide you with a little personal direction you need to get approved, and you can start owning and stop renting. Now, if you commit yourself to helping yourself buy a home, I'll commit myself to helping you get there. That's my job. Yes, you can get in position to purchase a home. And like anything worth it, it's going to take a sacrifice. It's going to take a little work. Sometimes it's going to take a lot of work. It depends on your situation. Now, I know that all of you who are watching this video right now, maybe you learned something, maybe you didn't, maybe you applied, maybe you won't. Just people's behaviors are all different. But if you decide you want to move forward, I'm going to show you 3 links I want you to go to where you can get more information. Maybe you want to apply today and get approved for a home loan with no down payment required. Maybe you want to apply to get your credit repaired. Maybe you want to apply just to find out what you pre-qualify for and find out what direction you need to go in so you can apply again later. All 3 of those are great reasons. So my name's Kevin Garrett. I'm going to shut this up here in a few minutes, but let me tell you a little bit about setting an appointment with me, okay? Because I want you definitely to set an appointment with me. Now, the days I typically take appointments are 3 times in a week. I both have morning and evening appointments, and appointments usually last about an hour, sometimes 30 minutes. It all depends on your questions and the situation, right? So the morning appointments are from 9 to 10:30, 12:30 to 2, 2:45 to 4:15, 4:30 to 5:15. Now, please go to BKG Lens on Facebook and book an appointment with me, and we can get started if you like. It's up to you. Or you can call me at 559-260-7950, or you can go to the other 3 links that I'm going to share with you here. I typically don't like to do Friday appointments. Those are administrative days for me. I do Saturdays and Sundays case by case and by appointment only. So if you decide you want to apply and you want to meet me personally, make sure you bring all your paperwork that we talked about. Paperwork like your pay stubs, your tax returns, your W-2s, your ID, your bank statements. Make copies of those, and you can bring them that way. It'll be a faster appointment. But if you go online to the link I'm going to show you in just a minute, you can upload all those documents 24 hours a day. Now, I can always replace my appointments, but I can never replace my time. So please, let's not waste each other's time. Please, let's be respectful. That makes sense? If you're not able to make it, you're just not able to make it. Now, I'm going to back up a second. I'm going to show you guys the 3 links that you guys can go to and check right now. I should have had it on the bottom of this slide, but I just thought about that today. So here are the 3 links you can go to. So write this down. Go to these links right now. The very first link is to get started today. Okay, if any of you guys are ready to apply for a home loan, you know you have good credit scores above 640, you know you don't have a whole lot of credit card debt or a whole lot of bills, go ahead and apply right now at that link that says link for applying for a home loan, and it'll give you an opportunity to upload all your paperwork. Now, for those of you, you know you got some challenges in your credit and you don't know exactly what your credit scores are, you can go to Credit Karma for free and get an idea. Credit Karma is not really that accurate, though. I can provide you with a better accurate report. If I see your report, I'll be able to itemize each account for you and let you know which account's holding you back. And if you need credit repair, go to this link right here. Answer a few questions. Let us know why you want to fix your credit. Why is it now a time for you to fix your credit? For example, you want to fix your credit so you can get a better interest rate on your car. You want to fix your credit so you can just buy a house. Whatever you decide to do, there's a few questions on that link it's going to ask you. And it's also going to ask you about your budget, what you're comfortable with every month, because it's not free, okay? Now, the 3rd link is to get pre-approved. Now, what do I mean by that? This link is where you can it's like a discovery link. This link will allow you to answer a few questions to assess where you are, where we can give you better guidance on how to get your credit score improved, how much debt you might need to pay down, or how much money you might need to save, to give you a roadmap and a blueprint. In other words, to put you on a path to homeownership. So there's 3 links here. Again, the first link is for you to apply right now. If you are willing to do that, I greatly appreciate it. If you're not, I still greatly appreciate it. If you're in need of credit repair, go ahead and click on the credit repair link. Fill out the little form. Let us know what your objectives are, your goal is, and we'll help you get to that point. If you want to assess your overall picture and find out what you need to fix to get on the path for homeownership, go to the third link here, okay? Well, listen, again, my name's Kevin Garrett. I work with SnapFi. I am a first-time home buyer program specialist, and I would love to help you first-time home buyers get yourself in a position to purchase a home. Again, you have those links. And one more time is my contact information. You can reach me on my cell phone at 559-260-7950, or you can go to my email address at kgarrett@snapfi.com. Again, I thank you so much for spending the time with me, watching this video. I tried to keep it short. I hope it was useful for you. If you like it, thumbs up, share it. I really appreciate it. And you guys have a great, great week. And if you have any questions, email me. If you have any questions, email me or call me, whichever you prefer. Thanks again, you guys. Have a good one. Bye-bye.